Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, July 6th, 2023. Before I click on all the charts, just want to encourage you to please click like if you would. Also, subscribe to the Wicked Stocks YouTube channel. Share the content if you would with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily triple Q, daily SPY analysis, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week that you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 month near term investor, always looking for 20% moves on those underlying stock moves. And so let's take a look at the Tesla report, the charts itself. Start with the big picture, work our way into the day. We did push through and close above this 280.85 channel top on the weekly chart. It also happens to be the exact same number on the daily chart today. You can see how we closed above it. We did not close above it by a 1% margin, and that is a threshold I like to see play out for, what I would call kind of buy signal clarity, buy signal reliability, if there is such a thing as reliability in the technical analysis field. They're by a matter of degrees, probabilities. And so this is a perfect case in point. Are we likely to continue higher? You could make that case by a degree, but it really is. I've used the 1% violation on longer term line studies for many years, and this is a longer term line study. It goes back to the January low, this formation. So it's a solid 6 months in the making. And, the 1% margin is deserved. And that is 283.66. So yes, if we settle today, Thursday, 283.66 or higher, I skew to the upside. I skewed to the upside anyway, a month and a half, 2 months ago when we closed above this 194.32 channel top, indicating perhaps a retest of the 414.49 all-time high, maybe by the end of the year. The real crux, though, would be a settlement above 280.85, because until then, we can tap out here in the low 280s. And as I've been saying, fall back into the 190s over the next couple of months. That is a real possibility. Now, yes, we did close above, the 280.85 formation on Wednesday. If you, liquidated at a short position, I don't have a strong argument for that. If you went long, I don't have a strong argument against that either. I do think 283.66 is worth waiting for. A daily settlement today at or above 283.66, and yes, a weekly settlement tomorrow, Friday, at 283.66 or higher does set up another meaningful buy signal as we move into a really later year, because closing above 280.85, that by a 1% margin, 283.66, does indicate 313.60 to 314.66, this old shelf top high area that went on for almost 2 months back in August of 22. That becomes a 2 to 3 week objective, but I do think that if we close above 280.85, this week, at the end of the week, then yes, this 414.49 is in reach by the end of the year. 3 to 5 month rally, perhaps up to 414.49 if we close the week Friday above 280.85 by a 1% margin. So it is by a matter of degrees, and we've already completed one of them. Yes, we've closed above it. Next would be a settlement today at 283.66 or higher. There's another slice, and the final shoe to drop would be a settlement at 283.66 on Friday, tomorrow, at the end of the week. And then, yes, all those upside conditions I talked about should be met. On the way up today, 286.27 can contain intraday strength. If we push or open today above 286.27, we just might reach 295.05 on an intraday basis, where a daily high can be made, can be placed. Now, 295.05, I don't have it shown here, but it is nothing more than a 5/8 upside Fibonacci long term from that 414.49 all-time high from late 21 to against the January this year low of 101.81. So 5/8 back, 61.8% is 295.05. Able to contain daily buying pressures. And if we close today above 295.05, I think by the end of next week, we may well reach into the 313.60 to 314.66 area, where we can top out on a weekly basis. And if settled above, would be yet another meaningful buy signal. So here we are. So anyway, in terms of 280.85, I just need to reemphasize that I don't see a fully valid buy signal yet. We do need to close above it by the 1% margin. Until then, we can quite easily fall back. I've used this analogy before, but I like to use it, the rubber band. The rubber band is seriously stretching right now, and it snaps officially with a Friday settlement tomorrow at 283.66 or higher, 1% above that meaningful weekly channel top at 280.85, where I think we could anticipate then continued vertical gains into that 414.69 area within 3 to 5 months. I think that's quite realistic. Until then, over the next couple of months, we can still fall back into the 190s. Now, on the way down today, I do have, and I've underscored it as a session containment level, 275.11. That is Monday's low. And what's significant about that is the move high session so far. That is the highest we've been since the January low. 275.11 is the low. It also represents a gap. And so if we close today below 275.11, I think that does pivot the market south aggressively into later week. 267.61, then likely tomorrow, 262.48 within several days. And over the next week or two, if we close today below 275.11, this 246.30 new channel bottom. I'm going to say that if we cannot close above 280.85 by that 1% margin, that you should consider 246.30 to be an objective anyway over the next couple of weeks. It just is that if we were to close below 275.11, that is once again Monday's low, I think it more aggressively pivots the market south. The directional dynamic shifts negative on a 3 to 5 day basis, and we could, under that scenario, actually test 246.30 by the end of next week, where we can bottom out on a weekly basis. It also coincides with the new rising 1/3 speed line. A weekly basis can contain weekly selling pressures, possibly into later July, right back into the 280s again within a week or two perhaps. It would be a settlement below this 244.24 to 246.30 area, and that's not going to happen today. That would tell me that a good high for the month of July is in, and yes, we can anticipate this narrowing zone between 186.03 and 194.32, possibly within 2 to 3 weeks, 3 to 5 at the very most. That is once again a long-term support area in the weekly chart between 185.52 and 194.32 that may well contain selling through the rest of the year, and from there we can rotate higher on up to new pullback highs within a matter of a couple of months of testing this zone. But one final thing, actually is a repeat of what I already said, is that the settlement 6 weeks ago above 194.32 was considered a long-term buy signal that carries with it the clear possibility for a retest of the 414.49 high, possibly by the end of the year. And yes, if we close tomorrow, Friday, above 280.85 by the 1% margin, I think within 3 to 5 months. And I'm going to leave it at that for Thursday's Tesla Report. I'll be back tomorrow, of course, with Fridays. Please click like, share, subscribe, and check out wickedstocks.com.